So, what do we think about the markets? Any opinions? I thought it was kind of interesting a week ago when it, I play around a little bit with Fibonacci support and resistance levels, and I drew this one from the high to the low, and I found it kind of interesting that one of the support lines hit right where the candlestick hammer pattern was last week. So, and then from there we've gone up. Now I'm not saying that that's going to be an all-time, that's going to be the bottom or anything like that, but it was kind of interesting that it stopped there. And when combined with some other technical analysis tools like the stochastics here, they also started showing some bullish divergence right around the same time that the candle formed, or just after. So, anyone have any thoughts on any of that?
So you're thinking it's going bull?
It's what?
You're thinking it's bullish? It's more bullish?
No, I wouldn't say that. I think it was just a temporary, I don't know yet.
It was a bounce.
I think that.
I think it's going to go sideways for a while.
Yeah, I think that this hammer pattern here was a pretty good indicator that at least for the short term we were going to see a reversal in the market activity, and the fact that it occurred right at a Fibonacci support level. So I'm not saying that it's going to continue bullish. I guess if I were to, my opinion would be that it probably will go sideways and maybe even come back and retest the support level. At that point, we'll have to see where we end up. I don't, short term, I don't see it going bullish.
What's that exact Fibonacci line right there?
What?
78%, I think.
Oh, what percent?
Yeah.
78.6?
It's 10,729 is your Fibonacci line. Is that right?
Yes. Yeah. And that's drawn from the high that we had back here in January to the low that we had back here in March of last year. So, I combined some different tools to, it's not exactly an exact science, but as most of you know who are technical analysts, is more of like an art form than anything.
How do you use that market sentiment line?
Well, that's something that's proprietary to Investools. I don't know if you're with Investools or not, but the market sentiment line is more of like a long-term trending indicator. I don't use any of these indicators by themselves. I use them in combination with other things to give me an overall idea of where the market's going. So generally, when the market sentiment line is in the upper or lower extreme, it's another indicator of the market being heavily overbought or oversold. So when it's in that range and it turns down, in combination with this this series of lines here, specifically I look at the green line. When it goes into the upper range and then drops below it, I also look at where the market sentiment line is. If they're both going in the same direction, generally the market will have a more dramatic move downward. So through here, if you look through here, the green line stayed up in here the whole time, but right here is the first time that it actually broke below it, and the market sentiment line was also turning down. When those are going in the same direction, and these other two lines, the red and the blue, are much more sensitive, but when you see these breaking down at the same time, generally you've got a more substantial downward move that's underway. So that's how I use those. But I also look at where the other indicators are as well to decide. So as an example, now it's not a foolproof science, it's more like an art form, but one other thing that I would have seen in the same area is the MACD was showing some bearish divergence, even though the market had been going a little bit higher between these 2 points. So to me, that's a possible indicator, but I never look at just one index alone to form an opinion of where I think the market's going. As any of you guys in here who are experts at this sort of thing, I'm sure do as well. So let's take a look at the rut. And these different indexes perform a little bit differently because they've got a different basket of stocks in each one. Some are more volatile than the others, like the Russell 2000. So you'll get slightly different information from each one of them, and analyzing each one gives you a little different perspective on the markets. But you see kind of the same thing here. If you look at the Russell, we've also got a hammer at the same time as we did at the Dow. And it also was right near, although it broke below the Fibonacci line, it is right near a Fibonacci line. Doesn't always work, but
Can you throw up the dollar?
the dollar? You want to see like a currency pair or what?
Oh, just the dollar?
What is the what's the ticker for that on profit chart?
DXY.
What's that?
Dollar, but
Forward DS?
futures it's
DX.
DH.
No, just DX?
Oh,
Didn't work. Not in profit.
Oh, DX.
I always look at pairs, so I don't really. Okay, yeah, dollar is another way to take a look at the market too, because it'll give you, not always, I mean, for me, technical analysis was much more accurate a couple of years ago than it is now. But a lot of times you can see how the different intermarket relationships affect different things, and it'll give you a little better perspective.
Do you think that any of these indicators are really going to help us understand how the debt, our national debt is just going crazy? Is that going to, how we can understand the effects of that? And I think those are way more long term.
Yeah.
Like we might get away with bullish trading in the near term.
Right.
But I don't know in the long run or.
Well, I mean, and this is just my opinion, and it's not based on these indicators. It's based on, I'm sort of, I do a lot of cycle analysis and things like that, but my opinion is markets primarily are sideways to down in the next 6 or so years. So I don't think, and if any of you follow Tim Knight, who developed profit charts, he has, he's kind of a genius at technical analysis, and he drew out sort of a chart on one of his blog posts of where he sees the market going in the next 10 years. And he's got it bottoming around 2016, and I would agree with that assessment. So while I think we may see some bullish activity in this year overall, I mean, it's probably going to go sideways in the short term here, but I think overall we may go up. That's just my opinion. I think in the long run, until around 2016, we haven't really hit bottom. So we're going to see a lot of huge moves up and huge moves down between here and there is what I think is going to happen. So that's how the debt it will probably affect us, but we can't see that from these charts. At least I don't see it in any of the technical analysis that I look at here.
Well, you're seeing the problems like over in Greece, and that shook up the market a little bit.
Yeah.
Yeah.
I mean, Greece, California, if it was an actual country, would be the 8th largest economy, and Greece is only $28 billion in the hole, and look at how that shook up the market.
Right. Yeah.
So you've got things coming down the line. It'll be
Right.
interesting to see how it plays out. But I figure because the euro will weaken probably because of that, that'll
Yeah.
probably force the dollar up. But, I mean, we're down the railroad tracks just a little bit further. We're in the same kind of thing.
Right.
It's mathematically impossible to pay back the debt. I mean, that's just the way it is.
Right.
So,
Yeah.
Just keep making money.
That's obvious, right?
so they'll have to inflate. Yeah.
Yeah.
I mean, that's how countries get out of bankruptcy, is they basically.
Right.
North Korea just, what was it, about less than a month ago, they traded 100 to 1. 100 old won to 1 new won, basically, and that was it. So anybody had any money,
Oops,
gone.
sorry, no.
Yeah.